Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and thank you for coming by today. Today is the first day of July 1st, 2019, and we are now in the final hour of the market. As you know, I believe that the prices that are as close to the close as possible are the most legitimate and valid prices of the day, and therefore the best prices to make your buying and selling decisions from. Now, occasionally I will buy something intraday like I did today, but I don't make a habit of it. But I will show you what position that we entered on the intraday today. So let me see, make sure everybody's, if I'm coming through loud and clear. Hey Mount Doji, how you doing, my friend? It's good to see you. Thank you as always for coming by. All right, so it looks like I'm coming through okay. Let me just make sure, get everything up and running correctly here before we get down to business. All right. So hope everybody had a good weekend. I did a bunch of hiking, did some studying, some chart study, just the usual. So, all right. So listen, the plan for today, first thing, we're going to run the U.S. legal disclaimer. That's about 40 seconds. Then we're going to come back. We're going to go through each one of my current positions. We're going to talk about when I bought them, more importantly, why I bought them, and how I'm going to manage them going forward. Then when we're done with that, we're going to talk a little bit about some investor psychology. Then when we're finished with that, we're going to go through my watch list. We're going to go through each stock one by one. We're going to take a look at the technicals, see if anything looks interesting today. We're going to factor in moving averages and RSIs. We're going to look for triggers and ATR channels, all the stuff we normally do, and we'll see if there's something that might be interesting enough to enter at the end of the day, but we shall see. And then after that, after the market closes, if anyone has any questions whatsoever, please let me know. I'll do my best to answer them. If you're not sure or clear about something that I discussed during the live stream, please let me know. Don't be shy. I'm here to help. So, oh, Steve Burns, you have to love that buy the close, sell the open strategy. Crazy run the past month. Boy, Steve. That is right. It was a monster today. It was a monster. Thank you, Steve, for coming by. It's always an honor to have Steve Burns in our chat room. He's a famous trader. He's a famous author, mentor, teacher, just all around awesome guy. And like I said, Steve, it genuinely is an honor to have you here in our chat room when you're able to make it. So thank you again. All right, well, listen, let's run the U.S. legal disclaimer, and I'll be back in about 40 seconds. So hold tight, please.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right. Glad that we got that out of the way. Mount Doji says it was a great run up this weekend after the close. Yes, it was. Hey, Andy, how's it going? Nice to have you. Thanks for coming by. Yeah, so, over the weekend we had the G20 meeting. There weren't any big surprises, and I think the market liked that. Although we have been up a lot bigger today than we are right now. We opened up, and we've been coming down ever since. So let's go ahead and let's take a look at my current positions, and let's figure out what we're going to do with them going forward. Okay, so first of all, Goldman Sachs. I did buy Goldman Sachs back here on the 27th of June when we had this break and close back above the 200-day. We also triggered the fractal a few days before. Fractal is a high with two lower highs to the left, two lower highs to the right. So I do like triggering the fractal within the channel if possible. But this was a little higher, but it did break above the 200, and it did have a higher low before it broke above the 200, which is which I prefer. So you can see we've had a really nice run out of this. Friday we did gap up. I did hit 3 profit targets on the gap up. I decided to keep it because it did close above the 3rd ATR channel. And so this morning you can see hit another profit target here at the open, and then I just almost got the high. It was about 5 or 6 cents below the high where I got out of another portion of the shares right there at the high. So that's always a good feeling. As you can see though, we moved up and we've moved back down. This is a bullish, this is a bearish price bar here, candle. We opened above the close, but we're lower than the open, but looks like at the close, if it were right now, is still above the open. So that would paint a black candle, which is generally bearish. But I'll tell you, because I phased out of 30, 40, 50, I phased out of about 60% of this position at this point. So at this point, we're at a 70.37 RSI. So what I'm going to do is if I had a full position of this, I would be getting out. But because I phased out and I have a lower position size now, I'm going to be a little bit more patient with the open profit. This blue line here is a 70 RSI. We did go below the blue line, and now we're above it. So right now we're at 70.36. So if it closes above 70, I will go ahead and keep it, see if we can get a little bit more out of it. Today, if it does close below the 70 RSI, then for sure I'll just go ahead and get out of the position. But this has been one really nice position. Again, it triggered a fractal. It closed above the 200. We had a higher low before it went above the 200. So this low here is higher than these lows here. The people that bought here most likely sold here. This is what moved it down a little bit, but it was strong enough to keep going back up. So all those sellers are out of the equations. The people bought these lows, sold this high here. Those sellers are out of the equation now, or at least some of them, which makes it easier to move up. But we did have some help with some news, obviously. So the plan again is we will hold it above the 70 RSI on a closing basis, but I'm really glad that I got those phase outs today, because got that one right at the high. It's always a good feeling. Excuse me. Okay, so that is Goldman Sachs. IWM. So I did buy IWM on Friday based upon, and I'll show you my chart here, the 10 EMA crossing over the 50 EMA. This is a really good quantified long-term back-tested system. It's a trend following trade. When the 10 EMA crosses over the 50 EMA on a closing basis. I did only take a half a position here, and the reason why is, my ideal trades come closer to the inside the -1 ATR channel. When we start getting up here higher, it concerns me a little bit. Although, if it took off, I still wanted to have some, so I went ahead and just bought a half of position. If we come back in here and the price action doesn't look too bad, I may add my other half there. But so that's the reason I took it, the 10 crossing over the 50. Obviously, it did move up nicely early this morning. And you can see I did hit 2 profit targets right at the open here. I had one here, I had one here, but because it gapped up over these, I got filled at both here. So this is one of those situations where phasing out does really work nicely for you. If it had just gone straight up, then of course I would have said, well, dang, I wish I wouldn't have phased out. But it equals out. Sometimes it goes for you, sometimes it goes against you. I was fortunate in this case to get out. Let's see, I got out of about 23% here at the open. So anyway, I'm grateful for that. You can see it has moved back down. We are at least back to positive. We were negative earlier in the day, but this is going to be a mechanical trade for me, just like a robot. I'm going to act just like a robot, and I'm going to stay in this trade. I'm going to phase out when the market goes my way, but I'm going to stay in this trade until the 10 crosses back below the 50. And this is very difficult for me to do because I'm more of an active trader based upon what the price action is each day. But I like to have different approaches to trading. I like to have discretionary approaches to trading. I like to have mechanical approaches to trading. I like to sell options. And the thing is, like with the swing trader, sometimes the market just takes off and goes, and it will never give you, if you're a swing trader, it will never really give you an opportunity to get back in. And so that's why I like to vary up my trading styles and have a portion of my account just trading mechanical approaches like this 10-50 EMA. So this is difficult for me to do, but trading is difficult. Sometimes you have to do things that don't feel good, but at the very least, I am very glad that I was able to get out of a portion of the trade up here near the very high. All right, so as I'm going to stay in this, if it goes up, I'm going to continue to phase out till I'm out of shares. To the downside, I will get out when the 10 EMA crosses back below the 50 EMA. So that's the plan. It's a mechanical trading plan. Okay, so Coca-Cola. Hey, Ramble Ron, good to see you. Yeah, it did today for sure, but keep in mind it does not always work. I.e., May. May was horrible for this approach. But June was great, and July so far is great. But always keep in mind that it does not work all the time. Nothing works all the time. So here's Coca-Cola. So this was an intraday trade. I don't usually take these, but I did like this. You can see we did make a higher high here. Here's a high. We came back down into the value zone. We made a higher high. We come back down into the value zone. We stop going down. We go sideways for a day. You can see Friday washed out or went below the previous day's low. Did not find, and sellers were not interested down here. That's why it bounced back up, because there were no more sellers here. Today, however, it did trigger a V2. Now, I bought this V2 intraday. You can buy this intraday or you can buy it end of the day, but I just was happening to be sitting in front of my computer and I saw this. So I did buy it intraday here, and I did already hit one profit target up here, fortunately. So, an alternative to this would just be to buy this at the end of the day when you really see it confirm. And what I mean confirm is the close is higher than 2 days ago's close. So here's day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes above day 1's close. Well, we don't know if it's going to close above. And V1s or V2s, you can use them intraday if you like. I just do most of my trades at the end of the day. But you can see I did buy here at 51.20. Did take some profit up here at 51.52. So as long as today's close is higher than, here's day 3. As long as today, day 3's bars, the third bar's close is higher than the day 1 close, I will continue to go ahead and hold this. But again, the reason I liked it is we made a higher high. We came back down into the value zone. Here it started to go sideways. We washed out. We reversed back up. So, so far a profitable trade. So let's knock on wood. All right. So PayPal, along the same lines as Coca-Cola, we made a higher high. We're above the channel. We're above the 1 and -1 ATR, which I consider the value zone. We come back into the value zone. We start to move sideways. Thursday, we spike down below Wednesday's low, and then Friday, we closed above Wednesday's close. So this is a valid V2 pattern. It also closed above the 20. It also closed above the 50 RSI. So as you can see, we got a really nice gap out of it. Got out of about 24% right here at the high on the gap, similar to PayPal. No, similar to, what was our other one over there? IWM. So we did get out of both of our profit targets right here at the very, very top. Friday, we did have the confirmation of the V2, day 1, day 2, day 3. Day 2 washes out day 1, day 3 closes above day 1. But now my initial stop on this, unless it moves higher, will be a close below the halfway of the washout bar. This is the washout bar that washed out day 1. So halfway of this bar, there should be some inherent support there. We'll see if there is or not. But as long as this does not close under this red line here, 113.89, I will continue to keep this and scale out. Now, if it keeps moving up higher and higher, then I will start tightening up my stop and using a trailing stop. But, see, 1 ATR is this distance right here. It's from here to here to here to here. This is a little bit larger than 1 ATR, probably like 1.25 ATR. So, somebody wanted to get out just based upon this bar being larger than 1 ATR. I really wouldn't blame them. But I am going to stick with this and use current for the next day or two, unless it continues to move up. This will be my initial stop. But again, I got out of 24% of my position up here, so it makes it a little bit easier to hold. So anyway, it is a profitable trade, so I'm grateful for that. The Qs. So I did get into the Qs way back here on June 4th. And the reason that I got into the Qs was the previous day we closed below the 200 and we closed below the 250. The next day we closed back above both the 200 and the 250. And, there's a good back-tested quantified approach to trading the Qs, which is basically stay out of them if it's under the 200 or the 250. Stay in them as long as they're over either the 200 or the 250. These kind of lined up at the same time. So, and in addition to that, we also had a nice V2. Here's day 1, day 2 washes out day 1, day 3 closes above day 1. We also closed below the third ATR channel and above the third ATR channel. So that's the reason I took the position here. I've been phasing out this entire time. As it's moved up, I phased out, phased out, phased out. And today, you can see I hit 3 profit targets at the open. So, I had them here, here, and here, but because the market just went blasting through all my limit orders, I got filled up here. So I am now out of the Qs. I ran out of shares. So anyway, this was a wonderful trade. You can see, this was a long trade. This was like a month's trade, but it was a great month. We did really, really well on that, but I am now out of, this was a mechanical approach. So basically I was going to, as it moved up my way, I was going to phase out until I didn't have any shares left, or I was going to get out if it closed back below the 200 day. So done with Qs. Thank you. That was a great trade, Qs. Appreciate it. And we'll wait for a new setup on the Qs. Okay, the SPY. So this is what everyone's been talking about today. Let me show you real quick in case we have some new viewers. But I do buy the SPY, the SPY, ticker SPY, each day at the close of the market. and then I sell it the first thing in the morning. So this is every day. Buy at the close, sell on the open. So why would I do this? So this is based upon a study since 1993. If you would have bought the SPY on the open in the morning and sold it on the close each day, you would have actually returned a negative 5.2%. But if you did the opposite and you bought at the close and sold first thing the next morning, you'd have returned 568%, meaning more than all performance in the SPY came in after hours trading. It came in the after hours trading session and the pre-market session. And then basically what these numbers mean is it got sold into at the open. And this backtest is up till 2017. And again, buying at the close, or buying in the morning, selling at the close, you would have returned negative 5.2%. Doing the opposite, buying in the at the close, selling in the morning, you'd have made 568%. Now, fast forward to 2019, the numbers even get better. The buy in the morning, sell in the afternoon, instead of returning negative 5.2%, you would have returned 13.9%. And instead of making 568%, you would have made 634.2%. And then Stephen Burns did a recent study on this year to date, about I think 10 days ago, and the buy at the close, sell at the morning actually returns 712.63%. So this is why I do make this trade every day. It's a long-term trade. You're going to have ups and downs. You can see over the long term, this has done very well. There are drawdowns, so you have to be aware of that. So please always position size, take a small position size so that you can do this for the long term without getting hurt and letting the numbers work for you. So that is why I bought the SPY Friday at the close right here at 293.06, and I sold it this morning at 296.68. So that was a monster gap up. So I have hit an all-time high in my account using this account today, or using this today. Actually, I made an all-time high with this approach even on Friday. But you can see we did sell near the top. And I will buy this again today at the close. So I hope that makes sense. If you have any questions about that, please let me know after the market closes, and I'll try to explain it. All right. So hey, Dr. Jorgensen, how you doing? Dr. Jorgensen says, I thought you gave up on Coke. Guess it is okay to buy the stock even if you don't drink it anymore. Looks like a good trade. Yeah, I gave up Coca-Cola at the first of the year, which was tough. I drank like 6 of them a day. So anyway, do I feel better? I don't know. Not sure. I miss them. But yeah, buying Coca-Cola is still okay. Mount Doji, great job with your phasing out. Thanks, bud. Appreciate it. Yep, that worked out pretty well this time. Guess Coke is just now recovering from you stopping. Yeah, that's probably why they've come down into the value zone. Steve Burns, what did you think of my Excel backtest review in the newsletter? Was it helpful? Yes, Steve, I saw that. And man, when I start seeing Excel and formulas and things like that, my eyes kind of glaze over. And I guess I'm just glad that I have ETF replay and things like that I can do, that will do it for me. But yes, it was. I actually, when I was sitting there watching, I was impressed. Like, man, Steve knows how to do all this stuff. So, but that doesn't surprise me. That doesn't surprise. By the way, everyone, if you have not been to Steve's Twitter channel, please do yourself a favor. It's at S Joseph Burns, and he posts such great things on there every day. You're really doing yourself a disfavor if you don't subscribe to his Twitter channel and read everything he posts. You can't help but be a better trader. And then he also has a wonderful website called newtraderu.com. And let me just put this up here. He has great He has a great video newsletter where he analyzes the markets 3 times a week. I watch it every single time it comes out. I wouldn't miss it. It's a big part of my trading, as far as I like to see what Steve's doing and what his thinking is. And then he also has some real-time real-time e-courses that you can sign up for and take. But it's a great site, newtraderu.com. So do yourself a favor and check that out. And then his Twitter account as well, which is at @sjosephburns. But yeah, Steve, I mean, that was amazing. I remember looking at the time going, 11, he's doing 11 minutes on the SPY. If you guys subscribe, you'll know why I was laughing, because they're not usually 11 minutes. Mount Doji, XLF hit 2 ATR this morning, and I phased out a little as well. Good. I'm glad to see that. I'm really glad to see that, Mount Doji. Listen, just because I phase out does not mean it's the right thing to do. There are a lot of people that do not phase out. They do really well. It's just a personal preference. And sometimes it will work for you. Sometimes it will work against you. But, you know, your trading methodology has to fit your personality, has to jive. It has to be sustainable. So it's just my preference, but I've been doing it a long time, and I do like it. All right, so that's SPY. So 293.06, we got out at 296.68. So that was a big one. I think that could have been the biggest gap up of ever since I've been using this. I think that was the biggest gap up. All right, VIX. I did buy a quarter position of the VIX on Friday, just as a little insurance, a very small position. You can see it's down 5%, but it was such a small, it was just a small amount that, you know, I had pretty decent position size with all my other stocks, and I just wanted just a little bit of insurance. So earlier today it was up higher. If it was above the 30, closed above the 30 ATR channel, I was going to keep it. But if it closes under the 30 here, I will just go ahead and get out and take a really small loss, because it was such a small position. All right, then our last position is TLT. So I did short TLT here on the 26th of June. And the reason that I shorted it, this is a good example. This is what I learned from studying one-on-one with Dr. Alexander Elder. But here we have a high with strong MACD bars, showing there's a lot of momentum and strength. Then we make a higher high with no green bars whatsoever. That means it's starting to run out of some momentum. It was a false breakout to the downside, then we came back, closed underneath. I didn't short it here. I was waiting for the first rally. I was waiting for the first lower high rally. See how this high is lower than this? So I went ahead and shorted it here on the 26th, and immediately went against me, right back up. My stop was halfway of the washout bar. The next day, it did test above it, but closed underneath. So it allowed me to keep the position. The next day, it went down. I hit one profit target to the downside, went back up, and then closed still under my stop, which allowed me to keep it. Today, it has moved down. I hit 2 profit targets to the downside. So I will continue to keep this now that it's moving the right way. It is still above where I bought it and where I sold it. So I do have a small loss on this, but not too much. And it was a half a position, because this is a counter trend trade. It's in an uptrend, and I was shorting. And whenever I do that, I take a half a position. So anyway, that's our trades. You know, I'm glad to say I'm having a really, really good day today. Big day. Oh, I guess I should show you, sorry, before I get on to the other stuff. But AMD, these are my, the puts I have sold. I've had people write me and ask me to explain a little bit more about why I sell puts. But just quickly, whenever I sell a put, I like to look on it. I like to look at it on 3 time frames. I like to see the price that I have lining up in several different locations. So Here, the $24 mark puts us in the one ATR channel. On the weekly, it lined up, when at least when I bought it, it lined up right at about the 50-week moving average and the -1 ATR average. And then on the daily, I sold it down right where it would have been about a 30 RSI. I actually got out of this position today. I locked in my position. You know, when you sell a put, you get a premium, and I made about 80% of the premium that I was going to make in a short amount of time. So I did go ahead, lock this in. It was a nice profit, but I am now out of advanced micro devices. And then Etsy, I also did sell a put down on Etsy on the monthly. We had some support at the 1 ATR channel. On the weekly, we had support at the 50-week channel here at $55. And on the daily, the $55 mark is above the 250-day moving average and right at about the 30 RSI. So as long as this does not close back down below here by the 19th of July, I'll be able to keep the entire premium. But if I end up with the stock, I don't mind ending up with it here. So, all right, so those are the puts. So let's take a look and go through and see if there's anything that we need to buy today. Let's see, what we have, about a half hour left. I've been running out of time because I gab and gab and gab, but you know, there's all this information I want to share. So, but I have to make sure I don't run out of time. Steve says, bearish divergence. SPY made a fresh new high and the VIX did not make a fresh low. Yep. And those are important things to look for, you know, correlations of market and if there's divergences between markets. But, you know, generally, if the S&P is going to make a new high, probably the VIX should make a new low. And that's what Steve's talking about, this divergence. S&P made a new high, but the S&P did not make a new low. So, you know, maybe something to give you a little bit of a pause or at least to notice. Ramble Ron says, that's why I love options. Yeah, you know, options are dangerous, everybody. You know what I mean? They're dangerous. So, you know, if you're selling puts, really, really make sure that you want to buy that stock there. That's all I can say. You can make money months after months after months selling puts and then have one big loss that can wipe out a good portion of your profits or all of them. So I am very, very leery when I sell puts. And I use a very small position size, and I'm very, very patient. And like I said, I want to make sure that if I am required contractually to buy it at that price, that I'm okay with buying at that price. So, but it's just one of my profit centers. It's been a good profit center for me this year. So, all right, let's get down to business and see if there's anything for today. So Apple, like everything else, did gap up today, did hit the third ATR channel. We are lower than the open. We are finding some support at this previous resistance. Now that we broke through that, that should act as support. And you can see it's exactly, intraday it did go below, but it will be somewhat of a bullish sign if we can close above this line here, which is the high of the previous resistance, which is now support. So nothing for me on Apple today. AMD, we talked about this. I sold that put back there. It went my way, so I took the profits. Amazon did gap up like a lot of other things. Nothing really for me on Amazon today. Boeing did not go up with the rest of the market. You can see we strongly lost that 200 and the 20 and the 50 and the 250. So big bearish day today on Boeing. I really wouldn't be interested in Boeing unless we started moving sideways and had like a higher low break back above the 200, but nothing on Boeing. Alibaba's having a big day, up 3.32%. This was the buy signal back here. I didn't buy it just because we had the Fed meeting a couple days after that. So that's what did stop me from getting into this trade. Obviously, it would have been a really good trade, but you know, as a general rule for me, getting in front of earnings or major announcements from the Fed for me is I just want to be on the cautious side, so I got out. But sometimes being cautious costs you, but sometimes it works. So it's just something you're going to have to figure out on for you personally, whether or not you're going to hold through announcements. So anyway, nice gap up. We are lower than the open, so that is somewhat bearish. But for those of you that own Alibaba, glad you have it. Caterpillar, boy, gapped up big and got sold into. There just were not a lot of buyers after the open. So this is a big reversal bar. It's about 2 ATRs. So I definitely do not want to get involved with Caterpillar at this point. Canopy Growth, nothing really there on Canopy Growth today. Cisco, well, I was waiting for this to come back in the value zone, and it did come back into the value zone in between the green lines here, but you see it didn't start moving sideways. It just kept going down. Now it's moving sideways a little bit. But in order for me to get interested in this, I'd probably have to have a V1, V2. Essentially, I'd have to have this move sideways for a while, have the bars narrow, spike down, and reverse back up. Alternatively, possibly, some kind of price action around the 100-day or the third ATR channel I might be interested in here, but nothing on Cisco. DDM, which is the double leverage Dow. As with everything else, it gapped up, closed back down. It was above the third ATR channel, closed back down. So this is somewhat bearish right here. Nothing for me. Just to show you some previous trades while we're on the charts, I did buy DDM here back on the 6th of June because the previous day we closed under the 200-day. And then we closed above the 200-day, and it closed under and it closed back above the 200 on the DDM is a good long-term profitable back-tested system. So I did go, this was a mechanical approach, so I was just going to be a robot. No matter what happened, I was going to keep in DDM unless it closed back below the 200 for a small loss, or if I was lucky, it trended my way and I would scale out, and this is exactly what happened. So I did scale out up here, move sideways, did scale out up here, and I got out of all of my positions right about here. So that was a good trade, but nothing on DDM today. Here's the Dow. It's the same as the DDM, just the DDM is the double leverage, so this is going to be the same, so nothing there. Walt Disney, well, listen, it did make a higher high. It did come into the value zone. It did trigger a V2 today. Here's day 1, here's day 2, here's day 3. Day 2 washes out day 1, day 3 closes above day 1's close. But I would not take this one because this is closing above the channel. And again, I like my entries on these V1s, V2s to be in the channel, because the movement between like the middle of the channel up to the third ATR, that's the easiest movement you're going to have. If you're short, from the middle of the ATR channel down to the third ATR channel. But entering a trade up here, I'm already kind of starting to get a little rubber band against me. Doesn't mean if this could go skyrocketing up. I'm aware of that, but I'm just saying in general. I'm not going to take anything on Walt Disney here. And actually this bar, day 1's bar, is larger than 1 ATR. So that's kind of a no-no as well. So day 1's bar was too big. Day 3's trigger's too high. Now here's an example of a trade that we did take where bar 1 is small. Bar 2 washes out bar 1's low. Also goes below and tests the third ATR channel, and then day 3 closes above day 1. This is a perfect V2 setup, and you can see it is in the channel, and it moved right up nicely for us. I did get out right about here. Etsy, nothing on Etsy today. I do have that. I did sell that put on Etsy, but nothing there. Ford, wow. Well, we made a new high, and this is a false breakout. Took out this high, closed back under into the old range. So this is a false breakout. Big reversal bar, so nothing interesting for me there. Facebook, Steve had a really great trade back here when we bounced off to 200, and I think he wrote it up to about here. but nothing there for me on Facebook today. 5 below. Well, this is interesting. We did close under the 200-day, and now we close back above the 200-day. So does that mean to buy it? Well, usually a close under and close back over the 200 days, not too bad of an idea from a risk to reward ratio. But what I don't like is that, see how we're at a 47.28 RSI. At one point today, we were above a 50 RSI. So if I bought in this area, I'd probably be targeting a 50 RSI, and it already hit that 50 RSI, rejected it, and it looks like it's going to close below the 50. So this has moved too much for me to take. So nothing on 5 below. Gold. Well, we made this huge move. If I were looking to enter gold, just like anything else, I'd like to see it come back down here into the value zone between the 1 and the -1 ATR channel, settle down, move sideways, then have a V1 or a V2 entry. We did buy gold back here on the May 30th when we took out this previous fractal. I know this is a little hard to see because with the big bars it skews how you can view this, but a couple nice things. We took out this fractal on that day. The same day we had a 520 EMA cross. We did come from a higher low. So these were all really good entry signals, happen within the channel. So I did buy it here, scaled out right to about here. So kept on going a lot. I wasn't in that part, but this still was a really nice 6-7 day trade. Google. All right, so Google, let me show you. This is a possible potential for today. This is for GOOGL. This is a good, profitable, back-tested approach using the 10-30 simple moving average. So when the 10 crosses above the 30, that's your entry. You exit when the 10 crosses below the 30 if you're trading it mechanically. So using this approach, it made, since 2000, it made 1,012.9%. And the drawdown was 28.1%. The buy and hold did make a little bit more, but look at the drawdown, 65.3. So it was very close in the return, but it had much less of a drawdown. So this would be a good entry today. Where is it? So the 30 moving average is 1099.61. And the 10 is 1099.40. So unless the 10 closes back above, I will not be buying that. So if the 10 closes back above 1099.61, I will go ahead and take a position, but we'll have to watch that at the end. All right, Goldman Sachs. Well, it is holding above 70. So if it continues, I will keep it. IBB, nothing really there. Intel opened up high, closed lower, nothing there. IWM, we have that as a mechanical approach, hit 2 profit targets. Coca-Cola is acting nicely, so if that does continue up, I will hold that overnight. Lockheed Martin, gap up, reverse. MasterCard, back up, reverse. 3M, gap up, reverse. So nothing there. Merck, getting into the value zone. This is technically a V2, day 1, day 2, day 3. Day 2 washes out day 1, day 3 closes above day 3, but it's closing too high. It's closing above the channel. So with my filter, that does not allow me to take that trade. Microsoft, nothing there. Netflix, strong day today, but nothing there. Nike, close back above, but that's range bound. Philip Morris, we moved up. We have this sidewards movement. I imagine this is going to pick a direction one way or the other, but nothing today. PayPal, we have that. We talked about that based upon the V2 entry. We hit 2 profit targets. I'm going to hold this as long as it closes above 113.89. The Qs we phased out right there at the top. Silver. We are getting back in the value zone, right? We make this high, Now we're starting to get into the value zone. So as soon as we start getting into the value zone, I start paying attention. I want to see it stop going down. I want to see it moving sideways. I want to see the bars narrow. Then I want to see a V1, V2 entry to enter me into the trade, into the direction that I want the trade to go. SPY, having a little rally off the low. So I will be buying SPY here at the end of the day, as always. All right, Square. We did close above the 200. I don't think I would buy this here. You know, if I was in it over the 200, I would keep it. But if I'm not in it, I'm not going to buy on this kind of reversal bar. This is a great example I like to show because there's so many signals here, and it's important to wait until you have a lot of signals. But here we have a low, we have a rally, we have a lower low. You see how deep the MACD bars are on this low. You see how shallow they are on this lower low. Just like Steve was talking about before, that is also a divergence. That is a MACD divergence. So we poked our head for one day down into the new range to the downside, then immediately reverse back up, making this a false breakout to the downside. At the same time, we have this significant MACD divergence. We also have a V2, day 1, day 2, day 3. Day 2 washes out day 1, day 3 closes above day 1, and that was a monster trade for us right up till about here is where we got out. So from bottom to top, that was about 14% move. So this is a great example I like to show of a double bottom with a bullish divergence, with the V2 entry, with the false breakout to the downside, close back into the range, and just to add the cherry on top, it closed back into the channel, which is a good sign as well. So nothing on Square today. SSO is a double leveraged SPY, nothing there. AT&T, big move up, but reversal, so nothing there. Bonds, we have that. We are short bonds. Glad it's down today. Tesla, similar pattern, gap up and reverse. Natural gas, nothing there. Oil, been battling with that 200-day moving average. Looks like it's going to close below, so nothing there. Dollar, very, very strong today. It was under the 100-day moving average that was acting as resistance, and today it boom blasted through. This is one of the reasons we may have had a reversal in the market. When you have a stronger dollar, that generally hurts the market a little bit. So nothing on the dollar. Visa, nothing there. The VIX, I will be getting out of my quarter position with the close under the 3rd ATR channel. Verizon moving sideways. We did take an entry here based upon this fractal, but it did go against us. We got out, got back in with the V2, moved up, did hit one profit target, and then it dumped on us, so we had to get out. So this was a loss position. But again, the losses have to be kept smaller than the wins. And I've shown you some real big moves we've had because we've been patient and we've let the stock move in the direction we wanted to. But when we're wrong and it goes against us and it's a loss, just get out quick. So glad we did. It's certainly lower than it was. XLE tagged the 200-day moving average and sold off, so nothing there. XLF, which Mount Doji has, is looking good. It's recovered. It was looking pretty not so good earlier in the day, but that looks fairly good. So glad to hear that you scaled out of that and that you still have some. Real estate is down. Tested that 50-day moving average twice. It's moved back up, so nothing there. Utilities. Well, I'll tell you, this technically could be a V1 today. See how we made a new high, we came down, we caught some support, we moved sideways, we spiked down. If this closes above yesterday's close, that will be considered a V1. If it doesn't do it today and it does it tomorrow, then it be considered a V2 because it moved up, moved down, moved sideways, spiked down. It's within the channel, and who knows? If this closes above 59.63, I would actually buy that. So let me just do the numbers real quick. All right, so that's XLU. And this would be a 10% position size for me. But only if it closes above close 59.63. So if this closes above 69.53 today, that would be my entry, but only if it closes above there. If I don't get it today, I might have a shot at it tomorrow. So healthcare, nothing there. So I don't, let's see, there's no gold. We're going to have to watch Goldman Sachs. But as far as potentials today, possibly Google and possibly utilities. But let's check Google again real quick. The 30-day is 1099.62, and currently we're at 1099.37. So the 10-day would have to close above that. So we'll watch that. We'll watch that till the end, and then we'll also look at this to see if this does close above. And then Goldman Sachs. So let's go back to our current positions. So as long as this holds above the 70, I am going to go ahead and keep that. IWM, that's a mechanical system. I am going to keep that. Coca-Cola moving nicely on that intraday trade. So glad I have Coke. But again, here, we make a higher high. We come back into the value zone. We start to move sideways a little bit. We have a big thrust down, price discovery down here. Market says sellers are not interested down there, and it reverses back up. So if I would have waited till the end of the day to buy this, you can see I would pay a higher price than I did intraday. But sometimes that works against you because you might buy here intraday and it might close down here. And if you would have waited till the end of the day, you would have never gotten in. So there's no free lunch. Doesn't matter what approach you have. There's going to be times it works for you, times it works against you. But fortunate that this time it moved with us. So, so here's the SPY. This is another example of, this was the previous high up here. This was previous resistance. We broke through it. So now this should act as support. And take a look. It's literally right now at this moment at support. So interesting how that kind of stuff works. Okay. So it certainly looks like VIX is going to have to go away, and the short on the TLT is looking fine. I have had my eye on DuPont here. We had this big gap down. But you can see we've moved sideways, 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 sideways. We're building one heck of a base here. And, based upon my fractal buying, here is a high with two lower highs to the left, two lower highs to the right. It's right about the, right in the channel. So, when you have sideways movement lends itself to big explosive movement after. You just don't know in what direction, you don't know which way. Big explosive movement eventually leads itself back to sideways movement. That we know, right? Volatility leads to no volatility. No volatility leads to volatility. So this has been no volatility. Very, very boring sidewards market. But I did get interested in DDM right here, because right here is the here's a fractal. So if we close above 76.10 today, I am going to go ahead and buy this as one of my fractal buys as well. And we'll see maybe if we can now start to get some movement after this sideways movement. So I'm also going to have to watch that. Steve says consistency in action is the only edge over the long run. So true. You know, as long as you're using good principles of trading, I don't really care what you do, just as long as you're consistent with them. There's so many people that jump from method to method. They see a method, it looks good in the past, they use it, it doesn't work, oh screw that, then they're on to the next one. They change things around all the time. Just, you know, get yourself some solid trading principles with moving averages, with RSI. You know, find something that fits your personality, and then be consistent with it. You know, just be. You might run into a drawdown the second you start, but it doesn't mean it's not a good approach. It just means the timing was off. You know, when you're making money, you're in phase with the market. When you're losing money, you're out of phase with the market. It's as simple as that. So you have to look and see. You know, if you're losing money, it doesn't mean it's not a good system. It just means currently that it's not in phase with what the market's doing. So, all right. So we have 4 minutes. All right. Goldman Sachs, is it going to close above the 70? We shall see. If it does not, I'm going to go ahead and sell it. IWM looks good. Coca-Cola is a champion of champions with that trade today. Thank you, Coke. PayPal looks fine. Qs we're out of. SPY we're going to buy. VIX is going to have to hit the road. And TLT is moving. Mount Doji says, I have to hop on a call at 3, so I will miss the Q&A. If you could share some thoughts on Twitter and XOM. All right, buddy, you got it. I'll talk about them, and you can take a look later if you can. Thanks for coming by, Mount Doji. Good seeing you, my friend. Okay, so at the moment we have to watch Goldman Sachs. Let's see if that's going to close above 30, close above 70. Excuse me. And the Google crossover does not look like it's going to make it. All right. And let's take a look at the XLU. That does not look like it's triggering either. So I'm going to go ahead right now. I'm just going to buy the SPY position.
Order partially filled. Order filled. Order partially filled. Order filled.
295.46. Okay. All right, and it doesn't look like XLU is going to trigger, and it doesn't look like Google is going to trigger as well. And it looks like Goldman Sachs is going to hold the 70. We'll see here in 30 seconds, but yeah. Oh, and the VIX.
Order partially filled.
Okay.
Order filled.
All right. And market 3, 2, 1.
Order cancelled.
All right. Well, nice day today. Very grateful to have a win, and this was a big win. This was a big win. We had some really good moves today. Um, so, all right. So listen, if anyone has any questions for me, please let me know. If there's something that you're not clear on, just don't be shy. Type it into the chat, and I will do my best to clarify it for you. And then but before we do that, I do want to just quickly put in a little plug for myself and let you know that I do offer private one-on-one coaching and mentoring and teaching in the evening times via Skype. So, I really like to teach. I believe I do a good job with it. I've had great success with my clients. I've really turned some of them around in an amazing way. I mean, they had lost so much, and now they're making money, and they're not even sure how to feel about that because they didn't even know it was possible. So, if you are interested, please send me an email. My email's in this in the description of this video. You can also reach out to me on Twitter. But generally, it just starts with an initial phone call, just a free phone call, and we just talk a little bit about. I just want to get to know you a little bit better. I want to get to understand how you trade, how long you've been trading, what challenges you're having, and what your goals are, and then I'll put together a lesson plan so I can help you achieve those goals. And if you do take lessons from me, be ready for a lot of questions. I teach you initially, but I literally make you teach it back to me before I let you go, so that I know that you have it. So if that's of interest, my hourly rates and my contacts in the description of this video. And then also, if you're enjoying these videos, if you're getting something out of this, if you're learning something, please do me a favor, hit the thumbs up button. It does help with Google, helps, promote the channel. And, if you watch and you're not a subscriber yet, hit the subscribe button. That also helps. So there are a lot of people out there that have a tough time trading, and that's the reason I started this channel. I wanted to share what I'd learned over the last 24 years as a professional stock trader and money manager to help people become better traders. So help me spread the word. I would really appreciate it. Okay, so enough of that, and let's see if we have any questions. So, all right, let's go with Mount Doji's question. So he wanted to look at Twitter, and he wanted to look at Exxon. Well, so as far as Twitter goes, we did have a V1 on Friday up against Thursday's bar. Thursday's bar was pretty big, though. I don't think I would have taken this trade, although it did work out really well here. But at some point today, but if I did take the trade, I would be targeting the 50 RSI. And right now, intraday, it looks like we did hit the 50 RSI and come back off of it. So for me right now, I don't think I would be interested in this trade. What I would be interested in, because we made a lower low, I'd like to see maybe another day up, but then a move back down, because remember, the people that bought here are probably going to sell up here. That's going to move the stock down. If it's strong enough to not go all the way back down and triggers a V1 or V2 to the upside, that's where I would like to get into the trade, Mount Doji, because the people that bought here sold here if it goes down. And so if it's strong enough to go back up, now the buyers here that sold here, now these sellers are out of the equation. So if it were me and I was looking at Twitter, I would be looking for a couple days down in a V1, V2 back to the upside. So V1, V2 is what I would be looking for on Twitter. Exxon. Well, on the plus side here, Mount Doji on Exxon, today did trigger a fractal, and but it triggered, it went right back down. That's why I like buying these things at the end of the day. So this is technically was a false breakout to the upside and down. It looks like it did hold the 200-day by 6 cents. I don't think I would buy this even though it rejected the 200-day to the downside. I mean, you could. You're not there. You're on a call. But, you know, if somebody bought this here, yeah, okay. I mean, if they're wrong very small. Even with the penny under the 200-day, they would get out. But I don't like the previous action of the day because there was a lot of supply and a lot of sellers that came in here today. So I probably would pass on Exxon. I'd like to see it close below and then back above if it were me. And then on Twitter, the V1, V2, that's the higher low V1, V2. That's what I would be looking for on Twitter. All right. Anyone else out there have any questions? So let's see, where did the Dow actually end up? Oh, 117. So we did have a nice little bit of a rally because it was flirting with going negative earlier today. So that's a good sign. That's a good sign. Okay, so unless we have any other questions, I'm going to get my hiking boots on and I'm going to go up hiking in the mountains. If you do have any questions that you can't think of today, feel free. You can email them to me or you can send me a message on Twitter and I'm happy to answer those questions. So, all right. All right. Well, I guess that's it. Well, listen, thank you, everybody. I appreciate you coming by. Thanks to Steve Burns. Thanks to Mount Doji. Thanks to Ramble Ron. Thanks to Dr. Jorgensen. Thanks to Andy. Oh, Ramble does have a question. What do you think of Jack? Let's take a look, Ramble. Jack in the Box, right, Ramble? Well, I'll tell you what, Ramble. Why don't you tell me what you think of Jack from a technical basis? Are you up for that? I will tell you, but what I think. But I'd kind of like to hear what you think. Maybe Ramble's wrong. Maybe Ramble is gone. We have a delay with this chat, so sometimes you overlap each other. No, not yet. Okay. No, I would not buy this. I mean, for one, we closed below the 200-day, right? We had a large range bar, larger than one ATR. One ATR is from here to here or from here to here. This is about 2 ATRs, which means that in order to get something to move farther than 1 ATR, because that's what it should move, that's the average, you need a lot of selling pressure. You need a lot of supply coming into the market to move something 2 ATRs. So on the negative side, we have a bar that's larger than 2 ATRs. We also closed below the 50-day, the 200-day, the 100-day. So that's all bearish to me. The positive side is that we hit the third ATR channel and we bounced from there. The last time we hit the third ATR channel, we also bounced for there. So, you know, if I were to get interested in Jack in the Box here, at the very least, Ramble, I'd have to have a close back above the 200-day. So that is my opinion on Jack in the Box. But I'm very leery of large bars whenever I want to go long. If there are large bars that go down, that means that there's a lot of supply that's coming into the market. So even if it does go back up, it will probably get sold into. That's why I like taking signals, V1 and V2 signals, off of small bars, something that's within 1 ATR, something that is just average. It's showing that there's not a lot of selling. So I hope that helps, Ramble. Okay. All right. Well, thanks again for coming today. Appreciate it. Hope you learned something. Hope to see you tomorrow during the last hour. The market should be interesting after this big day to see what happens tomorrow. But anyway, I think we're positioned properly. We have some diversification. We have some banking. We have small caps. We have some beverages. We have a little tech. We're out of Q, so no more there. We have the overnight SPY. And we're short bonds. So I think we have a nice variety. We're not too heavy in one position. So, all right, everybody. Well, on the way out, I've got to play the U.S. government required disclaimer, and so go out, do something nice for somebody today. It doesn't cost anything. You could make their day. Who knows? They may really need it. So, give somebody a smile, or open the door, or give them a wave, and it'll probably make you feel good too. So. Thanks a lot for coming, everybody, and hopefully see you tomorrow. Have a good rest of your day. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.